One and all, so we saw quite a lot of sentiment shifting overnight, and I don't think we're going to go to sell on the S&P, but we did, and they really went long. We crossed 50%, which I showed you last night. If you saw in the S&P channel, we're seeing like a knee-jerk reaction here, so they are selling it. So that's really interesting, and you see how they're quick to sell it. You're looking for these down spikes, and these are probably news related. They're probably looking at the Twitter and things, maybe looking at Reddit and things like that. But we're seeing like a knee-jerk reaction, and whenever it does, whenever they go long, they quickly sell it. They went long, quickly sell it. Went long, gradually, quickly sell it. So this might be another one of those situations. A break of 4,000. They love their round numbers. It could be that. It might not be news related. It might just be the round number, potentially. But you can see the quick, erratic spikes. They're quick to short. So bear that in mind. And this is the daily chart. Look at the hourly. And looks like we're going to make a buy in 54 minutes on the hour. All depends what happens here. If it falls, it will encourage them to short, and then we will get the buy. If we rally, they might go long. Right, so in a way, you have to think we want it to fall initially in order to get a better entry and to convince the retail guys that we are going to fall, so they get trapped. So we can rally, but ideally for me, if I was going to trade this, I probably want it just to come down a little bit more, just to make sure that they're going to, be trapped on their trade. It's going to be quite horrible if that's going to be the case, and then we'll have a low at the round number and we'll pump. Got FMC later, so it's possibly going to be playing havoc with everything. So what's going to happen right now in 10 hours time, it's probably going to reverse. So we do pump, we'll probably sell off. If we dump, we'll probably be rallying off those lows, because FOMC will just be a catalyst for a big move. So wait for that to cross over. It's probably going to make a buy, but then in 10 hours time, it's probably going to flip, and it's going to flop, and it's going to reverse. So just got to be careful. And we're probably going to make a buy on the US 30. It's looking quite heavy. You probably would want to sell that, wouldn't you? If you don't have a look at the sentiment and you look at the technicals, you think that's quite bearish. So they probably are going to sell it. So an eye on that low, which we did break, that arrow that I showed you in Discord. And we did break that level. Looks like that was a trap. We whipped below. They think, oh, we're definitely bearish now. Thing is, we've got to be quite patient, and you've got to wait for the crossover. And then once we've got the crossover, then you want confirmation. Okay, so don't just leap in. And it can be quite painful, and I wouldn't trade this because it's very expensive. Even on a micro lot, it can be quite expensive because it moves a lot more. When you think the S&P is your 4 digits, this is 5 digits, so you're going to have to add an extra amount of risk to your trade. And so even on a micro lot with the extra zero, if that makes sense, an extra decimal place, can be quite expensive. And you probably wouldn't want to be trading like a large size on this unless you're really convinced on its direction. Quite choppy, but perhaps we're going to make a buy there. So you'd want to wait for 50 minutes and perhaps welcome the idea of this falling just to ensnare these guys. The axe is just being absolutely horrendous. Probably possible to make quite a lot of money on it. You wouldn't want to be swing trading because there's no, we're just ranging, aren't we? And we are very extreme. We had passed the 20%. We had got to 13% down there. So we're really, really extreme. And don't forget, we do need bears in the equation. We can't just have all bulls or all bears. We need to have a mixture. It's like a yin yang thing where we need to have a balance. And the 50% is your natural equilibrium. 13%, probably a little bit too extreme. And we've gone off that, the natural order of the sentiment. So got to be careful when we get down there. It's like that's quite unusually skewed, basically. So and we also had that resistance up here as well. So we're really extreme on the sentiment. We had some technical resistance as well. See, we're creating like a down channel, perhaps like a wedge maybe. Be careful. They've gone long, so we are falling, but they're going to be quick to sell it, like they always do. like on the S&P. Gold. So I was saying we should probably wait for 1840, and the reason for it is if we look at the 5-minute chart, I'll show you. Had a big move to the downside, and probably what you want to do is wait for us to get back in that range, see how we're in, like they sort of went chopped sideways. So 1840 would be above this sideways chop, and then you know, we would be out of that trap if a trap is being set down there. So you can wait for this range break to materialize. You can see how, you know, these grid lines are quite useful on the trading station, because you can, you know, use them to map. So 1840 would get you out of that trap. Potentially, you know, then you can know where your stop was, 1838 or something, you know, something like that. But you probably want to try and get back within that range. We're currently below that range. You can see down there, big old move, huge move down there. It's like escalator up, elevator down, and it's like saying that they don't want you to get involved on this move. They want you out, and that's what it looks like, a flush, just to get retail traders out, probably because they're skewing things. It looks like one of them moves. Maybe 5 minute isn't the best time frame, but it's quite nice for entry. 15 minutes is also good. You know, if you want to get like a sniper entry, but you probably want to be careful, and you probably want to be avoiding the ranging conditions. Wait for a break above that range, and so we can see we're actually a sell, and they might short it, and we might go into buy. We might cross 50%, mightn't we? So very tricky, and that's that. So messed up this a bit, but it doesn't matter. So resistance there because they went long, and then we've got support down here because that's where they sold it. So in between 1842 and 1828, perhaps you could even look for a long there with a stop here. It's a $4 stop, and then that would be nicely out of this chop that we're seeing. So it's all about getting a good entry. Don't enter at market, place orders, especially today, because there's going to be a lot of noise and a lot of movement sideways. And so Euro USD making a buy, which is of note, and we are a buy at the big picture because we're below 50%. So, you know, stop here, 106.36, tight stop. If you get stopped out, it's not going to break the bank. And then dollar yen. What a move that is. It's made a sell, so that's of note. And so here-ish, 134.98. So think of 135 as being a resistance. They went long, or shall I say they got burnt out. They had to exit. I'm not sure if people would go long there. It's probably less shorts. So I suppose people might be buying out there, but it looks to me like this was a stop hunt, and people had to exit. So that's what I think this is. 135 resistance, and 135.15 is a technical resistance. 135.25 is a technical resistance. So, you know, we've got some peaks here to contend with. They might sell it, possibly. So you've got to be careful. Remember what I said about orders, really important, and also to take lots of breaks as well, because it's a really long day. I'm not sure if we get a PAL speech. Normally we do, but it didn't say. You might just get the release of the data, and we get that document that we can look at, but I'm not sure if PAL's speaking. It doesn't say. Normally it does say on the economic calendar, so I'll have to have a look at that. Trade safely, and I'll speak to you guys soon.